So how bad is the U.S. budget situation? Will the OBBA really result in America's financial oblivion, and is a U.S. fiscal crisis inevitable in the United States? These are the questions that are going to be addressed in this video, where it's going to be more of a deep dive into the numbers of what is going on with our government spending, revenues, deficits, and if things get left unchecked, where do we go through there? It's not really an opinion piece on how the budget will be managed or what the best policy solutions to do so is, more just a statement and of the numbers and the facts on the situation. I'm going to be having my colleague Murphy McCann, who's been a guest on this channel multiple times, and he's discussing it, and he's going to be showing his presentation that he did at our meetup recently that was in Beverly Hills. If you like to see my speech from that same meetup, watch the video I did about how rich families lose their fortunes. But if you'd like to see me speak and possibly Murphy on some of our other upcoming tour destinations, check out the Eventbrite page where we have details on upcoming stops to Santa Cruz, California, Zurich, Switzerland, Amsterdam, Rome, Boston, Washington, D.C., and San Diego. I look forward to seeing you all then. Without further ado, let's get started on what's going on with the budget.
Okay, let's get this started. I'm going to be talking about the federal budget. It weaves into a lot of aspects of what's going on in financial markets. So I wrote down this number that we're getting started. I wrote down this number. That's 5. I'm going to put a T next to it. 5 trillion is about as much as the government takes in taxes and is supposed to take in taxes next year. I'm using round numbers here. If anybody wants to get to the decimal place with me, you can do it all you want. I'm not going to, really talk too much in decimals. So 5 trillion, if whatever, that's our income number. That's what we take in taxes and revenues. I'm going to throw another number out here. There's 3 trillion. And what is 3 trillion is what I would call absolute, you can't get out of them expenses for next year. Think of your mortgage, right? A big piece of this is interest on the federal debt, and another big piece is Social Security. These are numbers that are very well understood. They're mapped out by very, very sophisticated quantitative analysts. And, and it's even an idiot could calculate them on the back of a spreadsheet, or on a spreadsheet, but just take it. I mean, if nothing else happened, we would still owe this 3 trillion out the door. No question. Here's 0 down here. There's another number I'm going to tell you, which is 7. Let's just call it 7.5. Now, what is 7.5? Actually, let me call it 7.2. I think that was the latest number I saw. What is 7.2? Anybody got a quick guess? We were talking about budgets and spending.
The amount of spend, the government spends.
Exactly. 7.2 trillion is roughly what Trump wants to spend in the budget. And this includes, so we talked about interest and Social Security. Interest and Social Security. This number includes everything. Defense and all the other social programs, Medicare. The 2 biggest ones are defense and Medicare. Let's talk about another number here. If all we had to spend next year was 3 trillion, nobody would care. In fact, we would lower taxes down to 3 trillion and everything would be cool. But that's not the case. We want to spend 7. This delta is around 4, right? 4.2, don't care. If you wanted to bring this 7 down to 5, right, you would have to cut half of defense, half of Medicare. Do you think the country could survive on that kind of, those sort of cuts?
Yeah. Okay. We got a
You could, but politically it would.
Yeah, politically it would be unpopular, but definitely. I mean, this is maybe not in 1 year.
It would have to take time. It's a pretty drastic decrease, right? There's no politician that would vote for this,
No politician has a long career.
Yeah. And I'm going to throw out another number. I will talk about decimals here for a second. There is, because our economy is strong and because our country is growing, if you look at our GDP over time, it's been growing over time. Any healthy growing, whether it's a company or a country, is able to run a deficit, a small deficit, to finance that. The currency's not going to collapse. The debt's not going to come into problems because you're always going to be able to roll your debt because you have a vibrant economy that's growing, right? So just keep that thought in the back of your mind. That, deficits. There is like a healthy deficit number where you're actually deficit spending, but it's not too much. So here's the question: what is a number that you think you could cut everything except the required expenses to make it politically palatable. Like if you're going to say, I'm going to go X% across the board for everything except the stuff that's non-negotiable. Defense, Medicare, other social programs, FEMA, etc. I would say that a draconian number would be 20%, right? 20%, oh my God, a lot of people are going to scream. You could actually feasibly get it done. And so what does 20% get you? 20% of 4 trillion is 800, that's 800 billion. Right. That takes you from 7.2 down to whatever, 6 and change, right? It doesn't quite get you halfway there, but it ain't bad. I'm going to kind of visually kind of put it right here. And that actually is potentially like a workable solution, but I'll tell you, if you run this into infinity, you're never going to have true control over your debt. Are you going to say that 1 trillion is a reasonable, deficit number that doesn't balloon our debt out of control over time? I would argue that you need to have it a little tighter than that. Just having modeled a lot of, spreadsheet and, financial models out in the past in my lifetime. So the question is, can we get ourselves out of this? And the one argument that we haven't talked about is, can we grow ourselves out of this, right? So we've got a $2 trillion deficit. What would it take? And Trump is talking about, we're going to have a little bit of, tariff money coming in. I think the number is like 200 billion is the total tariffs coming in. So it still doesn't quite get us there. And just say, like, roughly, if you net all this out for what, if you think that these numbers are too high, let's just say that you still have to generate over $1 trillion worth of tax revenue. Sorry, let's just talk about $1 trillion worth of tax revenue, right? Income taxes. So income tax rates are what? Let's just say they're 25%. Are people following me? Does anybody have a question?
Like based on Hauser's law, it's about 18% the government consistently raises or taxes.
Okay, so if it's 18%, fine. It makes the number even worse. Let's stick to 25. The problem is that over time, if you're going to be adding 2 trillion of debt to your deficit, to your balance sheet every year, right? Imagine you're an adult, right? And you're living your life and you buy a house for $2 million, right? And your spending is more than you take in, right? A couple $100,000 a year, but you're consistently spending $250 to $300 a year. Right? Imagine that. What happens to your personal debt?
But what if people want my debt?
You make 200, you spend 300. What happens to your balance sheet?
I mean,
Your credit cards go up, right? The amount of debt on you personally goes up, right?
But what if people want my debt and I can control that and like what the
How
debt
would you control it if you're constantly spending 300 when you only make 200? You're adding 100 to your debt load every year. Personally.
Or $100, like 100 of what debt? Like the debt is dollars, and they control dollars.
You're saying that we can inflate it away?
I'm saying worst comes to worst, they could put in yield curve control. They can devalue the currency. They can make the rest of the world. So
let's talk about that in a bit. Right? There are tools. You're right, but the problem is that if this is left unchecked and right now, this is a particularly big deal because of this 3 trillion, this number for interest last year used to be about $1 trillion less. We did a lot of financing during COVID. Do you remember how low interest rates were for the government during COVID?
Yeah.
Like we slammed the Fed funds down to nothing. The 10-year was close to 1%. Historically low rates, like by anybody's standard. We did a lot of financing. All that debt is now maturing. And it's ratcheting up to today's rates, which are, do you know where Fed funds is?
4.25.
Yeah, it's 4 and change, right? So that's a big difference between 1 and 4, right? You're adding, 300 basis points to that. And on the long end of the curve, because we actually issue across the whole yield curve, we issue some short stuff and some long stuff. The long end is at least 300 basis points higher. So that's adding about almost $1 trillion worth of additional expense to the balance, to our overall deficit here. So if you're keeping on adding to that, and if you think that there's going to be an issue refinancing all this debt because people understand all these numbers, all the sophisticated treasury investors understand these numbers and so rates are effectively. This starts to actually spiral out of control. I mean, adding $2 trillion in debt times 4% next year costs another What's 2 trillion times 4? It's another 800 billion, right? It starts to take your deficit up here, and then deficit up here. We're actually at a pretty, for 5 trillion of taxes to be 2 trillion above that in spending. If you were to model that out, it starts to get fairly dramatic in terms of the impact on the overall budget. Now, move forward. Why does this matter? And let's talk about, I talked a little bit about why it matters. Let me talk about a little bit of what it takes to knock this back down, right? One of the things that you talked about was slamming the yield curve back down, right? The Fed comes and says, hey, we're going to lower Fed funds down. If inflation's at 2%, we say we keep it at 2.5%, 3%, right? So that's a delta of, maybe 100 to 150 basis points, right? So if you brought the whole curve down 150 basis points, right, and suppose the long end comes along with it, you can't impact this, right? So that is one way to kind of this total number back down, which obviously impacts this number, brings it down. The other thing that Trump wants to do is he's trying to bring foreign direct investment into the U.S. He wants to reshore a bunch of function companies that have been producing things overseas, drugs, defense, semiconductors, etc. What he's targeting, and I think this is a pretty lofty goal, but he wants 3 trillion of direct investment into the United States, right? The question is, how does that impact my budget, right? So if 3 trillion of investors come in, let's just start to map it out. We're talking rough numbers here, folks. 3 trillion of investment, I would hope investors would want like a 20% return on that investment. And if you were to go build, if you lived in Korea and said, oh my God, no, I have to produce in the US, I would want at least kind of a 20%-ish handle on my investment in the United States. So 3 trillion times 20% is 600 billion, right? That would be my profit number multiplied times the tax rate. That's 150 billion in taxes. What does that do to this overall deficit? That's 150 billion. It just doesn't make that big of a dent. Like if you look at these numbers sort of, at a real high level. So along with this probably comes, you do have to add a little bit of employment tax, right? So say your payrolls are 30% of this. Let me just cook up some quick numbers here. That was 20%. Say you're 600 billion in 600 billion in payroll times 0.3-ish, or 0.25. Let's say it's 0.2. That's another 120 billion. So you get like 370 billion of tax revenue. It starts to make a dent to get us kind of halfway. Let's hope that all this happens. It could actually incrementally, if you do what Trump wants to slam the yield curve, create a bunch of investment that creates a bunch of tax revenues, we can start to get close. But right now the numbers are pretty stark. I think if you look at this, it starts to explain a lot of what's in the big, beautiful bill. And it starts to explain a lot of, the things that he's trying to achieve in his administration. This isn't a plug for his administration, but it does illustrate and is consistent with a lot of things that he's trying to do. So let me just stop it right there. The point was to kind of bring everybody up to speed on just the basic facts.